Welcome back to your market update with me, Tradespotting. Wall Street's major averages initially moved lower on Monday after the release of the Senior Loan Officer Opinion Survey, SLOOS, a report by the Federal Reserve. According to that report, respondents reported tighter credit and weaker business loan demand in the first quarter for commercial and industrial loans and commercial real estate loans. Responding to this, SPDR Regional Bank and the Invesco KBWR Regional Bank ETFs both resumed their deep slide, while the S&P Financials sector added 0.3%, but that was only in rebounding from a nearly 2.7% decline that we saw last week. Treasury yields were higher on Monday, with the longer end 10-year yield up 5 basis points to now 3.50, and the more rate-sensitive 2-year yield up 5 basis points to 3.97%. Meanwhile, the New York Fed's survey of consumer expectations for April showed a fall in short-term inflation expectations. In earnings movers now we have Catalent, CTLT is the ticker, plunged, and Tyson Foods, TSN, among the S&P percentage top losers after the protein giant slashed its guidance. If you followed along with these pre-market videos and caught the special we did this morning on Tyson, then either I helped guide you away from staggering losses or helped you capture 20% on common stock alone at open. Some people would call that their trade of the year. Not me. AMD, Advanced Micro Devices, up 5% nearly on Monday as investors continue to try and suss out the sentiment surrounding AMD after their first quarter results were released among all the moves in the artificial intelligence market. Last week, AMD gave a respectable first quarter earnings, but share price plunged 10% in reaction to weaker than expected second quarter outlook. Chief Executive Lisa Su says that AMD expects mixed market sales in the months ahead. More now on those alarming trends revealed by the April 2023 Senior Loan Officer Opinion Survey. This is a survey that measures bank lending practices, and it's revealed some alarming trends. Banks are tightening their lending policies across all categories of commercial and industrial loans, which leads to weaker and weaker demand from large, middle and small-sized firms. Bad for the economy. Similarly, lending standards for all commercial real estate loan categories also tightening. When it comes to loans to households, lending standards tightened for all categories of residential real estate except government-sponsored enterprise and government residential mortgages. The demand for all residential real estate loan categories weakened. Home equity lines of credit were also impacted with tighter standards and again weaker demand. In response to the special questions included in the survey, 2 unique questions added each quarter to tease out the current themes of the economy, banks have reported that lending policies for all categories of commercial real estate have tightened over the past year. They also cited a less favourable and more uncertain economic outlook, reduced tolerance for risk, and deterioration in collateral values, and concerns about funding costs and liquidity positions as reasons for changing the lending standards. Another huge warning sign within a warning sign. Perhaps most concerning of all, banks reported expecting to tighten lending standards again across all loan categories for the remainder of 2023. The reasons cited for this include anticipating a decline in the credit quality of their loan portfolios and their customers' collateral values, along with all of these concerns about bank funding costs, liquidity positions, and obviously all the deposit outflows we've seen. It's clear that the lending landscape then is going through dramatic and significant changes, and borrowers need to be aware of all of these new realities and be prepared to face all of these new challenges. What do you call a dog magician? I'll tell you in a minute. This is the weekly time frame, reminding ourselves that we're above the 50 simple period moving average, that when price action in the last 3 or 4 weeks has dipped below 410, that's ended up as a wick, and that week has closed above. And so we look left to see that the body closes are higher than the previous high, and that most recent low higher than the previous low. So still persists in, on this leg of the trend, an uptrend. Let's then down to the daily time frame and see today slightly positive after our reaction most recently testing that 50 simple. Not yet showing anything positive in terms of momentum yet. 4-hour time frame, same sort of story, previously divergent, and risk is on. 1-hour time frame. Let's zoom in for the extra specials. You've got your gap. If you're to fill that, you'll now be below the 200 period moving average. It was a test at the time. You get an early signal below the 50 simple. So the crucial level on SPY is 412. 412 or 411 spot 80. And the equivalent across the market, it's easy to tell. If you break below 4.8, you'll be filling your gap at 4.6. And subsequent to a previous lower high, that would be not so great. So we're looking for price action on SPY to be volatile, to hold important levels of support and resistance. And looking at it the minute, it's either going to drop lower and test those levels we talked about, or push higher, continue that uptrend, fill the gap at 414 and above, and then go on test the previous high at 417, 418. Crucial level to beat from there on out is 421. So let's take a look at VIX, give us a greater picture on the volatility. You can see that it's quite stagnant. We'll go back to 4-hour, get a picture of this. Rejection subsequent to the 200 period moving average brought us back to the lower side of this parallel channel. Hold that, and it's unlikely that SPY drops through the floor. It could persist at these levels while SPY slowly creeps up, of course. And we can see that it's testing this quite strong test. So if the RSI does push into the bearish control zone now, that'll be SPY doing well, because VIX is about to lose its support. That's interesting. It does seem like this channel will persist with so much fidelity over such a long period of time. We shall return to that towards the end of the week. Thank you very much for watching the Tradespotting market update. I hope I've been of service so far this week. We've got a live show coming up next. Tune into that. And tomorrow marks 2 years of never missing a day on the live stream. Thanks very much. Hit that like button.